in the last 2 weeks, every investor who's come on the show, like big investor, small investor, has talked about India as being the hotspot, that they're evaluating India, they're looking to buy into India. And I'm like, whoa, what's changed? What's changed?
Look, I mean, we are facing that as well. So I would say that the amount of incomings we are getting on India, amount of interest we are seeing, especially from global investors, is off the charts. So there is clearly demand. We actually did a report a couple of weeks back, looking at the longer term sort of attractiveness of India. But just a couple of the numbers I wanted to sort of share with you. So for example, if you look at Indian equity markets, I mean, by far, I think we think India is the best structural story out there in EM. But if you look at the market historically has a very strong track record of generating returns. Indian equities have given you 16% compound annual returns over the last 2 decades in local currency terms, 13% in dollar terms. That's twice what the EM has given you, MSCI EM market, right?
We just made those comparisons right now.
But it's also, it's not just the beta, it's also alpha. It's been the most fertile ground for picking stocks. And we actually did a comparison across 10 different markets, EM and DM, 7,000 odd stocks. India has the largest proportion of multi-baggers, which we mean the stocks that give at least 10x returns over a 5-year period. So more than half of the market has actually, out of the top 500 stocks, have been sort of multi-baggers. The number for DM is 20%, the number for EM is 30%, India is 54%. So it's by far outstripping the rest of the developed and emerging markets.
My worry with this enthusiasm and this optimism on India is that the market starts to look overbought.
Valuations are expensive, that's for sure. And I mean, it's interesting because India was actually the worst performing market in first quarter, and now it's in dollar terms the best performing market in the second quarter. So things have gotten or rallied pretty significantly. So our sense is, look, I mean, as I said, near term things could consolidate here, especially as you said, valuations are expensive. Tactically also, if you look at the breadth of the market, the mid caps, I mean, the market is up 10% in the last 3 months, Nifty, but mid caps and small caps are up 18 to 20%, right? So it does seem the rally is pretty broad based. But we take the comfort in the fact that the fundamentals are still strong. Macros look very stable. You have earnings that are growing at 15% plus, and the first quarter numbers are pretty strong. And so we do think that maybe the market sort of consolidates here, but you want to be sort of looking at this market, kind of buying on every possible weakness, which is what we exactly said back in March. So we had a report out in early April, 2nd or 3rd April, and we said, look, the market has corrected 10% or so. Sure. The good quality stocks have corrected 15%. So this is the time to get in, and obviously the market kind of re-rated. So my point being, I think you are still able to find some good quality companies at reasonable valuations, not cheap, but
what's the most favored structural story in India right now that offers value? Because banks have been bought into. I mean, wherever you talk about India, the top 3 sectors are consumer, banks, technology. Let's go beyond
we don't like technology and consumer as much. So the favored parts we would have is still banks. It is over-owned and people own it, but valuations are actually not expensive. Banks are the one sector which are still trading at mid-cycle valuations. They're gaining market share from non-banks, and people have to revise their numbers up. So we still like banks. We still like the larger manufacturing story. That's not sort of, priced in the entire Make in India, the cyclical, CAPEX cyclical story that's playing out in India. It will include infrastructure names. It will include cement companies. It includes the aviation stocks.
But foreign investors have been staying away from infrastructure, right? Which is the key driver for growth.
Yeah. So we do think the Make in India, the PLI schemes, that's a big theme which is playing out, and that's not priced in, right? Consumer is obviously expensive, but we like only parts of consumer space, the high-end consumption, some of the staple names, because there is rural recovery happening in there. So there are pockets of consumer we like, but our sort of focus is more on the banks and the broader manufacturing sector, which includes a lot of sectors, as I said. I think that's something which is not fully priced in.